Welcome team, welcome councillors, welcome staff, welcome those people who will be joining us online if they wish. Councillor Laws has now joined us, so we have Councillor Laws online. Any other participants online, welcome this morning. We are here for our Finance Committee meeting, our scheduled Finance Committee meeting. I'll just ask, we have this committee meeting is scheduled for now, and I'll just start if there is anyone with a particular need to actually use a phone or use or send emails during this time rather than finance business, if they could please ask for leave to leave the room, because I'd just like everyone to concentrate on finance for this next period of time, which is critically important. I just want you to note that.
If you just can't take it anymore, and you just want to
you just put your hand up and say, Kevin, look, Chair, please, I've had enough of this. I just need a break. And I'll say, Brian, Councillor Scott, you may go and have a biscuit and revive yourself.
What happens if it's a text about the finance stuff? Somebody emails in and says,
no problem at all if it's particular to that. But I sat at this last finance meeting and we had people here and we had people that were emailing and on other business and asking questions that were complete that have already been answered. So I'm just saying we're being paid by our constituents to do council business, and it'd be really good if we stuck to that.
Thank you.
Good as gold. A very compact agenda today. So welcome all aboard. We have apologies from Councillor Meffin and Councillor Forbes for lateness.
Can I also add to that my early departure around about 10 o'clock, 10:10?
Thank you, Councillor Noon.
I'm happy to move. Oh, no, better not.
Moved Councillor Wilson, seconded Councillor Kelleher. All those in favour? We have no public forum, unbelievable. I'll move that we confirm the agenda as set. I'd someone to second that. Councillor Somerville. Those in favour? Just remind all members about their need to work through their conflict of interest should they have any. That's up to your discretion, but we do that very, very well, and just remind you of your obligations under that part of business. We have no presentations, and we have our minutes on page 3 of the agenda. If someone so moved that they be accepted as a true and correct record, Councillor Wilson, seconded Chair Robertson. All those in favour? We have no open actions. And we move on to 9.1, which is our first matter for consideration, which is our quarterly report for 3 months ending September. Mr. Donnelly, Sarah and Mike, thank you very much. Thank you for preparing the report. And I'll hand straight to the writer to give the breakdown of that report. Much appreciated.
I think we'll probably just take it as read, and it's probably easier if you just want to work through it and people can ask questions on the various bits. But it's effectively it's the same as what you've seen previously. So it's got the various reports are as attachments. So the statement of comprehensive revenue and expense and the statement of financial position are what you're used to seeing either in quarterlies or you're getting them attached to the CE report monthly. So you're probably quite familiar with that format. Treasury report is standard. That's the same as we've been presenting in the quarterly reports for some time. The activity financial report is different. That's the one that's so the fourth attachment and its colour, it's got various colours. We've changed that a bit to try and hopefully make that a bit more readable, and it effectively has an all of council summary. That's where the forecast is produced from, and it's got more detail on the forecast in there. And then it's also got a CapEx summary, and then it's got pages for each of the 4 group activities. So in the past, we've sort of included that commentary. We've had a variance report, which is sort of have revenue and expenses, and probably been a little bit confusing for people. Hopefully this is a bit more readable and you're able to see the revenue and expense variances for each activity, by activity group. So that's probably the main change. And then the last attachment is the SSP, or the level of service measures report. Again, that is fairly standard, that you saw that, a cut down version of that in yesterday's council meeting, but this is the full quarterly with the comments, and, some more stats on where everything's at. So everything's fairly standard. Then the cover paper then tries to just give you the commentary on what's in those key in each of those reports. So it follows the same format, that there'll be a section for the SCRE, then for the statement of financial performance. And overall, if you have a look, we've just, in the executive summary, it just outlines sort of the key 2 or 3 bullet points and takeaways that there are. And the main one out of that is obviously year to date, we're slightly ahead of the position that we were expecting to be in for the first quarter. But of course, first quarter is quite early. Forecast is slightly better. The forecast deficit is actually, is forecasting that it'll be 468 below budget, and there's obviously the explanations of those are through the various reports, and then the last bit, the level of service, just the key indicator stats that most 69 of them are on track, but there's 6 at risk. So that sort of gives you how the report flows. But if you wanted, I think in the past, you've just stepped through each report and taken questions if people have got things that they want to raise or find out more about. If we can answer them, we will. If not, we'll go away and get some more detail and bring that back to you.
Excellent. I have already one question. I'll take that. Councillor Laws.
Thank you. Can I take you to section 10 on employee benefits expense, and then to the diagram on service delivery performance that you've just mentioned? So I've got, it's my page 7, and it's section 10 or clause 10. There's a diagram there. I've got a printed out sheet. I assume you've all got that as well, yeah? There are, according to this, a variance of budget for the quarter of September for FTEs 52.5. Now, I'd read that as staff vacancies, have unfilled staff vacancies. Have I read that right?
Yes.
Yep.
The comment at the top of the table, we say that there's staff vacancies.
Okay. That's a huge number of staff vacancies from a base of 352. So as a percentage, what's that, about 15% of staff vacancies not filled. But then I go to the service delivery performance, and really, apart from one, which is really not within your purview, you're doing pretty well in terms of being on track for achieving service delivery performance, yeah? Would that be a fair summary?
Yes, I agree with that, Michael.
Yep. So I guess I'm asking the very obvious question. Given that you haven't got 52.5 staff working for you, it doesn't seem to be affecting your performance overall. Is that a fair summation as well?
So I'll just take you to para 11. We've got 960,000 above budget expenditure on consultants to cover vacancies. So there is, your statement is right in terms of not affecting performance, the vacancies. It's, we're only a quarter of the way through the year, and we will be tracking that service performance very closely if those vacancies continue. But we are spending OPEX to hire consultants to cover those gaps in some key areas. So we are having to offset those vacancies in other ways to ensure we do deliver the program we committed to.
Right, but the employee benefits that you've saved is, or the employee staff costs you've saved is 1.8 million,
That's right.
and you're budgeting $1 million ahead for consultants. So,
Yep.
Yes, I'd have to say, why do we need to fill the vacancies if we're going to be filling our service delivery, and we appear to be fulfilling our service delivery targets, and we're saving money at the same time?
Yeah, and look, that's one of the questions when we go through and look at any vacancies before we recruit is do we need to? And obviously a key part of the long-term plan conversation is appropriate resources to deliver the plan that we've got. So it's a very valid point to highlight. We've carried vacancies of those sort of numbers for the last few years, while the employment climate has been quite tough. And we haven't necessarily hit all of our service measures if we think about the annual report this year. So while we're tracking well at the moment, I wouldn't sit here and say I'm 100% confident that our big stack of greens and service levels will carry on if we keep carrying this many vacancies. But it's a valid point, Michael, around, testing our own thinking before we jump into recruiting for every role.
Well, yeah, it's just that, the rate bird we've imposed, Richard, and I'm just looking at this and going, well, you seem to be doing pretty good with 15% less staff than you budgeted for. So I guess you're suggesting that we should have that discussion in greater detail at the long-term plan.
Yes. Yeah, absolutely.
Okay. Thank you.
Thank you, councillor. Any further questions on the opening paper? And then we'll move into I just had one question on page 6, which is $435,000 increase in Tory Flood Protection Scheme grant revenue. So that is, I assume we've got that money, and that was dependent on the timing of the project expenditure. So is there any potential of risk for that money? And what is the project status?
No, so if I just explain that, the way that it works is that we're awarded the grant money and we don't record that in our SCRE, our statement of comprehensive revenue and expenses, until we've actually incurred the expenditure. So what happens is it's a little bit, there's a little bit of timing around river levels and suppliers being able to actually provide the services. There's a lot of COVID around, so there's been, it's a bit hard for us to budget exactly how that works will actually be completed. We know it will be completed in quarters, but they were just a bit quicker. It's probably in relation to really Christmas that they're trying to get some of the work completed before we roll into that Christmas period. So it's just a timing issue where we have incurred the expenditure and get to recognise the grant revenue a little bit more in advance to what we budgeted.
Thanks, Sarah.
And overall, the project is still fine.
Excellent. We will just head to the, sorry, Gary.
Just going to move the weeks here. Move the recommendations.
Okay. Second.
Right. Are you going to do that on the whole report or go right through all the papers?
So just from process-wise, if we just keep working through the different sections, revenue, service levels, and then move everything as a set at the end, just in case there's questions on service levels.
No, that's very cool. So we'll just go, Councillor Scott.
Yeah, no, thank you. Just Richard, if you could just remind me, it was following Councillor Law's question, that page 7, the employment, the one with the biggest variance in terms of the difference between now and projected numbers is operations, is 15, which is quite significant in terms of the numbers there. So operations covers, where does that impact?
So that does transport still sit in here from a?
No, so I did separate out. Sorry, so I should explain this. Transport used to sit in operations, but it's just below it. I separated it out into that line so you can clearly see it. So
engineering, environmental implementation, and natural hazards, and civil defence. So those 4, Brian.
Yeah.
Sorry.
15. Wow.
No, I did that because it was confusing.
So it is a it's an area that has carried vacancies. There is recruitment ongoing in that area, but it has been a challenging area to recruit.
Okay, thank you.
So if we move to page 10, which is a statement of comprehensive revenue and expenses, do you wish to make any comments on that, Sarah?
You've been asking questions on that. I'm happy to take any further questions and any
Cool. Or we'll just
Did anybody take on that?
process. Good. Any questions on that?
No.
Should I have asked,
You can,
sorry, I'm going to go back, if that's okay, just for Tim's question, which I think.
No, we're going to take that offline.
We can, if.
Unless you, if you specifically understand.
That's the
Remember
next,
Mister?
that's the next page.
Next page.
I was putting it on
Yep.
17, paragraph 17,
Statement
sorry,
of financial
Yep.
position.
sorry.
So Tim did ask a question about ratios yesterday.
Yeah.
Which,
Yep.
Page 11, statement of financial position.
Mr. Chair. Sarah, the commentary at the bottom of the notes B, trade receivables, and it was mentioned earlier on in the document or whatever, that will be exactly the same commentary that you have at the end of the first quarter of every.
It is, yes. Yeah. So obviously we send out our rates notices dated 1 September and they go into receivables at that time. Now, some people do pay on the invoice. A lot of people just set up in their internet banking to pay us on the 31st of October and hold on to their money for it as long as until that bill's due. So ultimately, they sit there in receivables on our balance sheet at quarter 1.
Cool, thank you.
If you're comfortable to ask that question now, we had discussed that we would, because Tim wasn't here, that we would get Tim to ask that question and then share that answer, but happy to do it.
No,
Happy to do
I
it
actually
like
thought it was about
Richard.
paragraphs, I couldn't remember the question full, and I thought it was paragraph 17 of the report,
Right.
so I'm fine if it's, it was,
So his question, if we're on to the statement of financial position, which is page 11. Yep, so balance sheet.
Yeah.
Yep. So what Tim's looking at is he's looking at the current assets. Total current assets is 95, almost 96 million. And then he looks at current liabilities, which is 117, 118 million. So from an accounting point of view, you call that, when you divide them, you call that your current ratio. And what accountants look at is, are your current assets bigger than your current liabilities? Because in theory, they're your assets and liabilities that you should be able to or will be liquidating and turning into cash in the next year. So it gives you basically a liquidity check. So you'd like to see your current assets always bigger than your current liabilities, because then you go, I've got comfort that all my debt or liabilities that are coming due in the next year or in the short term, I've got enough cash coming in to pay it. So that's what Tim was looking at. Ours is a little bit complicated. He asked a couple of questions. One was, do we have a policy, or do we measure that ratio? No, we don't. And really nobody in local government does, because we have other financial measures and ratios that we do measure. The ones that are in all of our financial prudence graphs that are in the annual plan and in the annual report. That's things around balancing the budget, level of rates increases, that does have level of debt and things like that. Our treasury management policy has what our debt ratios are as well. So what we're allowed to do. Those we had them anyway, and they got tweaked slightly, but fundamentally stayed the same. Those align with the covenants for the LGFA. So they're around. There is a liquidity one in there, which we are well. I think we've got to maintain liquidity of 110%. We basically have a huge amount of headroom in that, and the same. Our other ones are around the level of debt and interest that we hold in relation to total revenue and interest net interest income. So we do have ratios that we measure, and we comply with all of those quite comfortably. So then, and the answer to Tim's question is, well, why is our current ratio, or why are our current liabilities bigger? It's because of the port on lending agreement. So if you look in non-current assets, the related party loan, i.e. what we've lent to the port, that 126 million is all non-current, because the...
Sorry.
Yep.
Sorry, Mr. Chair, when you say these numbers, you say them, we're trying to I'm trying to express related party loan 127. If you can sort of point to it, because you're obviously familiar with this.
So it's the one with the note 3
Yeah.
next to it.
Yeah.
So all of that sits in our non-current assets.
Yeah.
But then when you go down into the liability side, you'll see where it says note 5, there's borrowings. Yeah.
Oh, yeah.
So 60 million of our borrowing is current. And then you go down into non-current in the next section, 91 million is non-current. So if you add those two together, you get about 150 million.
Yeah.
Or 151. The difference of 25 million is our own debt. Yeah. So, and of our debt, basically 5 million is current and 20 million is non-current. But so on the liability side, we show the loans that we've got from the LGFA as current and non-current. But on the asset side, we're showing all of the on lending to the port as non-current. In a perfect world, the two would mirror, but the agreement, the on lending agreement that we have with the port says that we will not withdraw their on lending loans or their facility without 2 years notice. So because that's 2 years is greater than 1 year, we have to show the whole lot from an accounting point of view on the asset side as non-current. So if you actually took it that you actually mirrored that, obviously then our current, although our current liabilities would stay the same, our current assets would jump up, quite significantly and would be well ahead of current liabilities.
You're right.
Thank you. Hey, thanks for that, Nick. Where can we find these ratios, percentage ratios that we're accountable to in this report?
Well, they're not. We typically don't report on them because most of them we don't report on them quarterly or monthly because they're year-end compliance ratios. So we report on them in the annual report. I put what we have to meet is stipulated in the LTP and annual plan. Then we report on them for the annual report, and then we do for LGFA. We complete a compliance certificate that we send to the LGFA, which we haven't had to do for this year. I think it's not due till potentially the end of this month. So we haven't looked at it yet. They haven't actually sent it out asking us to complete it.
Okay, and I'm coming from a relevant point of ignorance, but maybe that's something to look at, like every 6 months.
Yeah. So
that, what are the ratios we as governance should be, looking at in terms of our job?
Yeah, I think it did. We do the Treasury report, and we could, we need to look at the format of that, and potentially we could do that because it's a simple calculation, and it'll show, that we just have a simple, here's the calculation, do we meet it or not, and what's the headroom? So we could add that sort of thing to the Treasury report would be where we should probably look at it.
Because to be honest, from a governance perspective, governance responsibility, I suspect the question that Tim has asked, or those ratios, is one of the fundamental responsibilities that we actually have. And you probably find year end's probably a little bit too late, in terms of our insight.
Yeah. The reason why we haven't really reported on it, as I said, the ratios, and maybe next one will maybe the next finance committee will look at that Treasury format, and we might just sort of go into it and do a bit of a summary of that. But when you look at the year-end ones, we are so far away. The ratio is like 25% of revenue, and we're less than 1%. So it's not like it's something that you go, oh, we need to keep a really close eye on that because we're getting hard up against it. It's sort of just so far away. But just as like you say, as a matter of completeness, we could start adding those to the quarterly report, and that way they're just there, and you just note them, and at least that you get that assurance that it has been calculated and that we are compliant.
Be a very good move.
So through given the chair, like when I actually read the report, to be honest, I find it a little bit difficult because you look at the reasons for the variances, and a typical statement is, oh, there's a timing issue, we've put money in or we've taken money out. So I'm, as a governor, I'm thinking, okay, so what are the insights? And I suspect, for example, every quarter, the things that I would be looking for is if we're 25% of the way through, if you project a curve in terms of expenditure for any particular item, we're 25% of the way through. We had typically expected historically to be 23% of our expenditure, but maybe we're only 20, and the reason, just from a governance perspective, what are the tools that we levers?
The difficulty with quarter one is that we're really starting our financial year, and a lot of things
Yes.
require planning at the start. So they're
Yes.
still on track, but as you're describing where our expenditure would be like a bell curve,
Yes.
that isn't actually how our expenditure is budgeted and how it does go. We do tend to, I suppose, ramp up, if that makes
Yes.
sense. So there's a lot of planning costs that we then go into actually doing costs. And there's also some activities at council that we can't do until quarter 2 and 3, and that's because it's weather dependent. So, a lot of monitoring, etc., happens more in summer, and sometimes that can only be done in summer, and it can't be done in those, I suppose,
But you can
rainy
project-
weather conditions in winter. So it is actually budgeted to happen in summer. So we don't actually have a bell curve with our budget.
I'm not suggesting you do, but you can project that curve, surely, because that's what your job is in terms of, and how are we tracking in terms of that expected curve, Anyway, it's just something to think about, Kevin, sorry.
Yeah, no, that's very good.
So if you just quickly, because it is an important point, Brian, is the forecasting, and we do it quarterly. So if you go back to page 10, that forecast full year 23-24, the grey column, that's effectively our first effort at just tracking how our revenue and expenditure, how we think it's going.
Yes.
Although the team will tell you the first quarter forecasts are very difficult because we're so early and there's so many unknowns, but it is an important part of our job, because we need to flag, and it's been made very clear by this table, that if we are going to, if we're having budget challenges in terms of unbudgeted overspends and things, then we need to flag them. So that's what that column effectively does.
But that's for the full year, isn't it? It's not for a quarter or 6 months, is it?
No, because it's based on the position we're at now. Do we expect to meet budget or not?
Okay.
The variance for where we're at the moment is the column next to it, the variance column after 3 months. That tells you how we're tracking at a point in time.
Thank you.
Councillor McCall, Laws and Wilson.
Just briefly, I was just going to go back to the liquidity ratio just to make sure I've got it right in my head, Nick. So if we add on the port on lending, which is accounted as a non-current asset, if you included that in as a current asset, assume it was within 1 year rather than a 2-year deal. So that would increase our current assets to 221 million, and the ratio would be 187%. Does that sound right?
No, what you would increase, so you take the 95 current assets, and then in the borrowings, in current, the current liabilities borrowing is 60 million. Now, I'm pretty sure only 5 of that is us, and the other 20, our other 20 is more than 1 year. So 55 million of that current borrowings is the port. So you would add that to the 95. So then you would have 150 million of current assets versus 117 or 118 million of current liabilities. So whatever percentage that works out at. And the key thing there is, it's over a ratio of 1. So so from a what you look at is that's what ideally you want to see.
Thank you.
Well, Kate.
You said Michael.
Oh, sorry, Michael. Yep. I've got Michael's name written down. Councillor Laws.
Thank you. Listen, I'm sorry, I didn't realise, Richard, I asked the wrong question. Well, I asked the right question, but I didn't answer that was question A, here's question B. I'm just going back to those staff numbers again. Item 10. And I will talk about this in the long-term plan. But I'm putting upon you as chief executive now at the end of the first quarter. You have 52.5 vacancies. You're running ahead. You're using those vacancies in this financial year to be plugged by consultants, which is costing you less than employing people to do that job by a ratio of about 45% by the looks of this. I'm going to ask you over the next 3 terms, the next 3 quarters, is it your intention to actually employ those 52.5 FTEs, or is it your intention to carry on doing what you're doing at the moment, which seems to be meeting service demand and saving ratepayer dollars to a considerable degree at the same time?
So my response to that, given I don't know the 50 individual roles, it will be a combination of those 2 things, because we will continue to have resignations as the year goes on as well. We have been running at turnover of about 20%. It's starting to drop, which is a good result, but we still have relatively high turnover. So there will continue to be vacancies throughout the year, but we will continue to try and fill roles where they are needed to deliver the program that we've got. So I don't think we will end up with 350. I would be amazed if we even got close to that. So it will continue to be a combination of the FTE numbers there and consultants to fill some of those key vacancies. But we do, again, going back to that comment, ask the question before we put an advertisement out. Do we absolutely need that role to deliver a part of the work program we've committed to? So it's not just a straight someone's resigned and we'll just go out and fill that role. That's just part of the process to test before we go and commit to recruitment.
I understand that, and thank you for your answer. I was just thinking, but for the rest of this financial year, Richard, it looks like there's a virtuous circle occurring, doesn't it? I mean, that's what these figures seem to suggest to me. Do they suggest that to you as well?
Not quite sure I understand. Sorry, Mike.
Okay, sorry. You're spending money on consultants to get the programs done. You're getting the programs done. It's costing you less money than employing full-time staff. That seems to be an unexpected but welcome consequence of presumably demand in the workplace, or you being unable to fill those vacancies. You aren't obviously having a difficulty contracting contractors to do that job, or consultants, and you are saving us large sums of money with this current set of circumstances. All I'm asking you is, does that mean that you might re-examine whether or not we need those staff at all? Because at the moment you're budgeting for 350 staff. I guess what I'm asking you is, do you really want to fill them? You're telling me that you probably won't have 350 by the end of this financial year. But does that mean that we now, as governance, need to really question, do we actually need this many staff to deliver this program or these programs?
Yeah, I suppose I feel I've answered it, and sorry if I haven't answered it clearly enough. We won't get near 350, but the vacancies we have some of them will be different vacancies to what we've got now. So I absolutely understand your point, Michael, and I agree with it. And all I can say is that we don't automatically fill the 350 roles. So it is tested. We know that we are now significantly over in our consultants budget, and that will continue to grow that gap, and we have to offset that. So, part of that will be making sure we continue to carry that personnel vacancy to make the budget balanced by year end. So it's not a perfect equation, but I agree with the sentiment, and I guess I can only assure you that we are carefully asking ourselves those questions before we commit to recruitment.
Okay, fair enough. Thank you, Richard.
Thank you. And therein lies the critical nature of the following workshops that we're about to have is setting and understanding our activity builds from the directors in our long-term plan discussion, Councillor. So that will be very good questions to pose during that time. Councillor Wilson.
I want to be pedantic here, and I'm sorry about that if that's okay for the moment, but I am trying to understand this as best one can, and it seems very obvious that you guys are very familiar with the stuff, which is makes us feel very comfortable. Except for if I look at say statement of financial position or the statement, even the previous one, and there's a whole lot of notes there. It took me ages to work out how those notes worked, because they're actually not headed attachment 1 or 2, and then you have to go back to the document. You've got 1s and 5s, and they just, so I just want to test how they work, if I may. So if I look at the issue that you've been raised earlier on what is our attachment 2, page 11 of 31, and the borrowings, which is 5. So I go back to the paragraph 17. Those numbers don't seem to translate particularly well to the, it doesn't tell me a really clear story.
Sure. So the difficulty with giving you the note numbers is that when this Word document is made, those paragraphs change by adding text in. So when I add anything into the executive summary, it then changes the notes that flow on further. So it's very difficult to write the paragraph number on the financial statements, because any edits that are made, and these are obviously then reviewed by other people, then it changes the numberings and then it doesn't agree up for you, which is very difficult. So what's happened is those numbers are in brackets behind. So it tells you the attachment number. So
Which number?
So I'm on 11 of 31, so that takes me to 5, which is paragraph 17.
Yeah, so it's got the attachment number. So the statement of financial position is attachment 2.
The page doesn't say that.
Yeah.
Page 11 never says attachment 2.
It says refer to the cover paper for comments on the above notes 1 to 5. Oh,
You can't find your
I
attachment
see what you're
2
saying. Yeah,
unless you go back.
Oh, I see.
sure. Okay, so I can put at the heading, like statement of financial position, what attachment number it is, so that you can find that a bit easier. That's fine.
That's fine, but then you go to that detail, which doesn't seem to marry up. Actually, there's no thousands. All of this is in thousands, but that's okay.
Yeah.
You guys obviously know that naturally. But if I can't understand what 5 means in that sentence, because none of those numbers look the same as what paragraph 17 refers to.
Does that not, because what it's saying is that that it says that it's gone up about
Yeah,
it's gone up from it's gone up to 60,059 minus 58,878.
Which is a
So
problem.
it says it's gone. Does it say in the
Yes, it does, but that's
yeah 111181? Yeah.
Millions
So
of
we're
dollars,
missing
yeah.
the zeros off the.
Yeah.
okay.
Yeah,
So
and but it's just about telling that story clearly. Yeah, I'm not. It does sound authentic, but it's about just. This isn't just for us.
No, exactly.
And I'm not. Yeah, I just think we've got too much detail, and that's not even clear that difference in there.
Right,
Yeah.
look, I'm 100% behind you, so you're not being pedantic, but what we probably need to do, if anyone is actually struggling with any of these forms, I think the process we need to do is ring the chair for a kickoff, and we've got co-chairs here, so ring us, and then we know that certainly the director and all his team are more than willing to ensure that these forms are in a way that we want them presented, in a way that we can understand them. So I just think anyone instead of debating that part of it now, which are very good points, the process will be, if you've got an issue when we get these reports, and we're getting them in plenty of time, that we get a hold of the chairs, say, I can't understand, or I'm not sure of this, and then we can take that either back with staff or give you clarity then.
Yeah, no, it's fine. I'm just picking up from Brian's point. Yeah.
Yeah, no, very good. Any further questions on the statement of financial position? Treasury report.
So the Treasury report is similar to what you normally get. We have the term deposit and cash graph. So cash on hand is orange. That includes cash on hand in our current account as well as in our Treasury. So our Treasury is actually an interest-bearing bank account, however, it is able to be drawn from. And the blue on the graph is term deposits. At the 30 September, we didn't have any term deposits that were sent in. However, that is no longer the case. We do have our rates money sitting currently in a higher interest-bearing term deposits. Then the graph to the right, which has the bars of blue and grey, that is outlining how our managed fund with JB Ware is held. So that has each of the different instruments included in our portfolio. And so the blue is the actual amount and the grey is what the SIPO is. Now, that SIPO is the median for the bar. There's obviously a range. So you'll see in the asset class allocation, all of the different asset classes in our managed fund are within our SIPO requirements. And then the little table down the bottom on the left is our portfolio performance for the managed fund. So that just outlines for you the interest and dividends that we've received on the managed fund. So they are actually, I suppose, cash in, like interest and dividends that have actually been declared. And then we have other is just fees and transaction costs in relation to those. And then we've got the market gain or loss. The managed fund has made a loss in Q1. It's a bit early to tell what that will be at 30 June. Currently, the share market's kind of going up and down a little bit. Some of that is actually with the election. Some of it's with interest rates changing what people want to invest in. It has actually come back a little bit since then.
Any questions on Treasury report?
Would it be appropriate to have the percentage in the column there? You know, because I look at that, you know, interest on managed fund 29. And I go, I don't know if that seems a lot of money, but I don't know if it's a good return or not.
Yep. So yep, I can do that for future reports. But what position would it be at? Would you like it? Because the problem is that's interest that we've earned on bonds, and we hold them at fair value. So they actually go up and down depending on how the market goes, because that's the sellable price.
Yeah. I don't know. That'd be
So that would be why the percentage is quite a
I think
difficult thing to
Sarah,
do.
probably the thing there is in the total increase decrease versus budget. That's the key number here.
Yep.
Is that impacting our year-end result? So I think just a comparator on that total at the bottom. I would leave the individual ones. It's just too much detail. But at the bottom, we were currently 471 decrease. What is that? Which is obviously back in the revenue expenditure, but we'll just put it in here as well.
Yeah. Like if it's a percent,
Thank you.
seems all right.
Any further
10,
questions? Statement of comprehensive revenue and expenses.
This is the one you were referring to. This is the change from previous reports.
Yeah, so this is the activities view. This first page just has a if you like, it's just got a repeat of the statement of comprehensive revenue and expenses that you see previously, because it just has it's in this format, because then it's the same as the pages that follow for each of the group activities, and it just means that we've got the check that everything balances through. On this first page there, the one that's in blue, there is also a CapEx. So we've got OpEx, which is the SCREE, and then we've got below CapEx. So it is giving you some additional information in that it's got all of our expenditure on there, as opposed to just the operating expenditure, which the earlier statement of comprehensive revenue and expenses had.
Comfortable? Then we go into activity financial summary, and we've got a question from Roy.
I think I might have gone on a bit too quick, sorry. I'm just going to say it's really good, that's the next part.
Oh,
Adaptive, yeah, what you're on.
Yeah, excellent, yeah.
Sorry.
Yeah, no, really good. Yeah, it is, because it's so we're comfortable with those individual activities, and we go to our activity performance report on page 20. Sarah, do you want to make us skip through that, a commentary on that?
So I'll hand over to Mike,
sorry, Mike.
on the activity
that's
performance
okay.
report.
So yeah, page 21's probably the starting point. That gives you oversight across all the 76 targets, and it's showing you the non-greens in Q1. And what I'll do is I'll quickly touch on the non-greens and then refer back to the chairs to where you want to go from there. So you can see there's 5 yellows, and you can see the activities they relate to in that graph, and you can see the red there and the black. So jumping down into page 22, and you can see under governance and community engagement, you've got the annual survey to understand community awareness perceptions of ORC and the target being satisfaction in our levels of service across the region. And Amanda might correct me if I'm wrong here, but I think that's a flag because it's around the timing of the delivery of the survey. I think, right? Yeah.
Yeah, so the community survey, we have done in previous years, September, October, reporting in December, but because of the election and all the polling that was going on, the recommendation from our consultant was to push that out, to delay the phone calling and the polling, which means we'll report it in the new year. So it's just a phasing thing, but it means that as per the measure, it will be done. We committed to 3 years and we have signed up and it's underway at the moment. It's just a timing thing caused by the election.
But maybe that through the chair, the commentary just needs to be added in there.
Yeah. So I picked that up. Yep. Thanks. And then jumping down to regional planning strategy. So again, page 22. Regional planning strategy and urban development activity. The measure of developing an integrated planning framework that enables managed urban growth across Otago, and you've got your target there around your joint future development strategies across Dunedin and QLDC. The red is actually relating to the QLDC delivery component of that target. So the DCC bit's being delivered and on track. And there's a commentary around what's kind of behind the QLDC timing issue. And moving down into page 23. And you've got your first yellow there under land and water activity. That fourth row down, implement a regional coastal monitoring program with an associated target of a monitoring program. Completed and reported to council. And it is actually saying it's on track. There's a bit of ground truthing going on there. And yeah, it's poised. And I think there's been a bit of a delay in tendering, so that's created the doubt around delivery. But overall it's on track. Work's getting completed. Moving down into the biodiversity biosecurity activity, and second from the bottom there, develop and implement a regional Indigenous biodiversity ecosystem monitoring program. Associated target of completing that and reporting that to you. And the yellow there is related to the NPS IB kind of landing this year and creating some basically put a backtrack and revise the monitoring program against that. And that's created some delays. But again, that work is occurring. And then flowing from that, you've got that next measure of percentage of data from that monitoring program and that target of 95%. And again, that there's some uncertainty around that because the program needs to be developed or revised rather against the NPS. And then the relating target is impacted by that as well. So again, that's the yellow, but again, that work's occurring. And then the jumping down to air activity, air implementation strategy is scoped. And again, the target of reporting it to council June 30. The commentary there, the work hasn't started, and it is dependent on the work around the air plan, regional air plan. So dropping down to page 24, you've got all greens there. Safety and resilience group of activity. Moving down into page 25, which is your last group of activity around transport, and you've got one yellow there related to scheduled services, punctuality, and timing of those services. And the commentaries yellow. It's talking to the road. The road cone issue, I think, and it's talking to Queenstown congestion.
Yep,
So,
I've got
yeah,
Kate
back to-
then.
so back to the chair.
Yeah, just a couple of questions here.
So first question was, the percentage of, scheduled services on time punctuality bus and the FDS for, Queenstown and Dunedin. I'm just wondering whether those should be split, and I know it's hard to do. But we're going to have a red all the way through to the FDS in Queenstown, or do
No,
we
so
take it off now?
the auditors will look at
Yeah.
that as a whole measure, so we just need to report it as a whole measure and make sure the commentary is very clear that
Okay.
one is being delivered and the other one has been delayed, so.
The unfortunate thing is that even if, and this is hopeful that Dunedin's problems are going to be fixed, and Queenstown's, God forbid that we have an answer to how that gets fixed. But the fact is that we could be 95 or 96 or 99% or 100% in Dunedin, which is definitely making it, and not, and so it's unfortunate.
The- the-
And that is
We need to
sorry,
do
Sarah.
Oh, sorry, I was gonna say, the transport measure that you're talking about, because we have two networks and it is quite different, the auditors have let us split that measure
Okay.
in the annual report.
Okay.
So you will,
Potentially be able
I'm
to
probably
see
a bit more closer read the annual report a bit more, but you'll remember this year it was split with green and red. So actually I think it was red and red, but they will let us split it, and we do put the percentage for Dunedin and Wakatipu. And that's just because obviously our ratepayers, if you're in Wakatipu, you want to know your percentage, and if you're in Dunedin, you want to know your percentage. So it's to make sure that the correct information's there.
I think it speaks to the point Tim's made a few times around setting of these
Yes.
for the next year as being absolutely critical, so it's telling us or requiring us to monitor what is actually important rather than arbitrary.
Okay, my other question is on the rivers and percentage of planned maintenance actions. Great that we've done that, but how do we know what those 90% is of that we've done, and if it's key we need done? We haven't got that as a line. If you're a
I'll
rate
check.
pay,
I'll have that conversation with Gavin around what sort of activity reports might be made available for
and so,
through the what there be sector resilience.
Yeah, safety and
Yeah.
resilience is where
so
that
that
should
they'll
be
come up in
going.
there. Thank you.
Andrew,
Sorry if I get this wrong, but I can't remember seeing through the Public and Active Transport Committee results from punctuality, etc. So my question is, the actual delivery percentage, which is affected by third parties, which we've got no control over, whether it's roadworks or congestion in Queenstown, etc. But do we actually have that number, or does the contractor, are they required to provide that information to us? I'm not sure who that question's for.
Probably for Lorraine
Yeah,
or Julian, sorry.
I'll just flick it
I'll
an
come
email.
back to you. Yeah,
No, all good.
yeah,
come
sorry.
I'll follow up on that.
Yeah.
Cheers.
I can go. I was trying to bring up the efficiency review. I'm allowed to get onto that, Mr. Chair, aren't I, in terms of this here and how it relates to this? Yeah. So I put it in the system here, get efficiency, it didn't actually come up. Which makes me wonder about the efficiency of this, but anyway, wasn't one of the outcomes of the efficiency review a commentary around the service activities that we're measuring against? And so the question,
We've got a full paper on the efficiency review the 6th of December.
sorry,
We've got a public paper with the full report and action plan coming to the 6th of December council meeting.
oh, okay.
So you're fine to ask it, Brian, but you're testing my memory in terms of the
Yeah, no,
details.
that's
sorry.
fine.
What it referred to was not so much these are our public statement of service performance measures and targets. And as there's been discussion, you know, we've got some work to do on setting those going forward, making sure that we split them and that they're measurable and meaningful. But the efficiency review referred to below this, you know, internally, we also set other things that sort of will feed in.
Yes.
And so there's a lot of indicators that managers use to keep track of where, you know, lower level works on, that's all going to cascade up. And that's what they referred to. I think there was a reference that maybe we were measuring too much in that next layer down, but that's something that'll come out when the review's discussed and, you know, we go away and look at the actions.
I mean, I agree with Lloyd's comment that it's all very good, but it's only as good as the activities that we're measuring against. And so I'm heartened to hear that part of the LTP process will be re-looking at those measurable items. And Nick's also saying that the level down as well via the efficiency review. Thank you.
Excellent. Any further questions? If not, I'll go back to Councillor Kelleher that made a bold move earlier on. He wishes to do that.
Regretting it now.
Yes, I still wish to move all the
Yeah, and a
recommendations.
seconder for that.
Still happy to second.
Yeah, seconded Elliot, councillor Weir. All those in favour? Recommendation made. Carried. Let's go. Now we'll move on to 9.2, which is a rate strike. And that's Mr. Donnelly.
Yeah, no, you can probably,
So this paper we bring every year based on our rate strike. So just to go over it, we obviously send our rates notices out on the 1st of September and they are due the 31st of October. We then, it does outline also penalties in here and how many people received it. So we, you might not remember, in the rates resolution, we strike a penalty on the 1st of November now of 10%, which is on both current and arrears. And just so you're aware, there will also be a penalty next year on the 1st of May, which will be on arrears only. So arrears are rates that have sat there for more than 12 months. So they are, I suppose, in your head, prior year rates that people haven't paid. Just be clear. So the key things is that 81% of our rates were paid by their due date. So that was slightly lower than last year, which was 83%. And by that, people that have paid on time, that's either cash payments or arrangements to pay us through direct debits. So obviously we count direct debits and that percentage is paid. We also did quite a few different initiatives this year that are outlined in the paper that I can go through. We increased our direct debit options, and we did that in response to the fact that some ratepayers are providing feedback to us that they're finding it difficult to pay their rates in one lump sum, and that's really just a reflection of probably the fact that we've had rates increases over the last 3 years. So that has increased for some people what that balance is past a bill that they can pay comfortably in a one-off. So I have outlined just after paragraph 16, I've outlined there a table of what our direct debit numbers were. We still do have the majority of people choosing to pay by direct debit with annual, which is obviously in one lump sum, but we have had a pickup in triennials, and we've also had quite a few people choosing the monthly, fortnightly and weekly option. So that has been greatly received by some ratepayers, that it has really helped them from a budgeting perspective. We also did something a little bit different this year, which was I emailed a reminder out to people that received their rates via email. So it's not economical for us to post a reminder. It's also, from a postal timing point of view, not really feasible. So it kind of takes, it can take 5 to 10 working days to get there in the post, and often they've already paid us. So it then becomes a waste of paper as well as a waste of cost. So we do provide that service for people that have signed up to receive their rates via email. And that was really positively received in the current year. We also had the rates brochure. So you would have seen that as an attachment to this paper that we haven't done in prior years. So we sent out a rates brochure with our rates notice, and that really just had information on what our rates were and why we were charging them for the different activities. I also, in the current year, will just draw your attention to paragraph 8, where we discuss the penalties. So we did actually have a small drop in the number of penalty notices, like that's physical notices that were sent. And you will see though that the actual penalty amount is higher. So that was 1.1 million compared to 975,000 last year. The percentage of that compared to our rates balance is not that different. So it was 1.82% compared to 1.79 last year. Some of those penalties that were struck on arrears. So we haven't done mortgage collection during COVID times. Mortgage collection is something that we're able to do under the Local Government Rating Act, where we can ask banks if there's a mortgage on the property to pay arrears rates. So we haven't done that, and we also haven't done, as part of that cycle, we're required to send reminder notices and offer different arrangements to pay, etc., outside of penalty notices. That hasn't been done during COVID, but it will be getting picked back up this year to try and get some of those historical balances paid. I think I've kind of, oh, the last thing was just, I have got a section in there, number 10, under ability to pay. So you will see that we had an increase in our direct debit defaults for annual. So that was significantly higher this year at 532 defaults compared to 288 last year. And that really used to be under 100. So it used to be just above 50. So you'll see I've put the previous 2 years prior to that as well. I've put that under ability to pay as the people that have contacted us. Obviously, we tell them it's defaulted and ask them for another payment method. A lot of those people have jumped down to monthly, fortnightly or weekly direct debits as a result of that. But it is really that obviously the money just wasn't in that bank account to get taken because the rates were a bit higher.
Excellent. Thanks, Sarah. Kate.
Just checking, when people choose to go for a fortnightly, there's no increase in the costs?
No. No. So you'll see a little section in here. This year I redid all of our online forms. So a lot of ratepayers found that our forms were difficult in the past. So we redid them all to make them easier. The idea of that is that we want people to sign up to definitely email. Like I would love everybody to be on email to save paper and to save postage costs and to save, printing. But obviously the way to do that is to make it as easy as possible for them. So we have improved all of our online forms, and the direct debit was part of that.
And that's great. Some places do have the more often you pay, they put a premium on it, an admin fee. I'm glad we don't, that's fantastic. I love your rates explained. Is that going to be something you only do once a year, or are you going to do it each time you send out a rates bill?
We only send the rates bill out once a year.
Yeah.
Yep. So it'll go out with that. We used to do it a few years back and then decided not to, and
but now you don't have to print it as often. You can just email it. I suppose it's easier.
Excellent. Elliot.
That's great.
Yeah. Just have 2 quick questions. First one, do we have any data on how many people get it by email versus post?
We do. Yeah, I can provide that.
Just out of curiosity, do you have a rough idea?
I think it's only about 15%. So it's actually really low for email. It's low, and it's if I'm honest, I was a bit disappointed with how many people did sign up. It's a lot lower than other councils. So I know that other regional councils have about 25%. So it is something, I suppose, that in the past our form was quite clunky. So hopefully with the fact that we've redesigned it, people were quite happy with it. We can build that percentage up, because obviously we would prefer not to have to put it in the post and have that delay for people, as well as the fact of just the environmental cost of posting it.
Do we have something on the physical one that's like, here's where you can go to sign up by email?
We did. So we did an insert this year with the rates brochure. So one side was information on how to sign up to email. It had a QR code that you could scan that took you directly to the email form. And the other side was the promotion of our new direct debits. It also had a QR code directly to those direct debit forms.
Keep going. Yep.
Sorry, it's a really dumb question, but I'm just wondering if there's a specific definition when it comes to rates, what strike means.
Sure. So sorry. So my terminology of strike is literally what it's called under the Local Government Rating Act. So you'll hear me say terms like strike and resolution and arrears and current. It's how it's described inside that act. So obviously our powers come from that piece of legislation, and we then pass the rates resolution, which outlines what all of the rates will be in each of our targeted area and general rates. And that rates resolution also outlines how our penalty rates will be charged and the dates of those.
It's just the point in time when we actually set the rates. We physically take the rates database, and then that's our information, and we do all the calculations to go, here's how much it works out on each rate, each property, and then that goes into the invoice, and we call that process as when we grab the database and do that, that's the rate strike.
Yep. Alan.
Thanks. The table at section 9 on page 27 up the top there shows a consistent increase, small but consistent increase in the penalty rates over the last 5 years. You've already described your new more flexible payment options, which clearly may help. But is there any other plan on on sort of dealing with what does appear to be a trend there?
So I do know that our top, so I do look at the top people that we've charged penalties to. I do know that the top 5 penalties that we charged this year that were quite large, they relate to quite large historical arrears. We have had discussions with them around arrangements to pay, and I have personally, as well as my rates officers, have had specific discussions with them, and they have just chosen not to pay rates. They are not interested in paying them. I know that, yeah, so that is sometimes the mortgage collection is what we have to do in order to get people to actually pay. There's no dispute on the rates balance. They understand it and have had it communicated to them. They just don't want to pay. Yeah, just refuse to pay. Yeah.
Okay, so that what appears to be a trend there may be skewed by a small number of large.
Yes. Yeah.
areas.
You tend to find there's two types of people who get a penalty. There's those that just, it's a mistake, they forget and whatever, and we work with them, and quite often, we sort that out. And then there's the bulk of it is people who are just historically not paying and have no intention to. And so what you're also seeing there is, as you go back, the dollar amount has increased over those 5-6 years, yeah, and the percentage has increased as well. So, the percentage of our total rates. But they're still, it's not like it's going from 1% to 10% of total rates. It's just, so you are seeing the dollar amount goes up naturally because over that period our total rates have increased. But then there is an increase in the percentage of people who, or that total amount going from sort of 1.5 now up to about 1.9. So you are seeing that it is increasing, which would be an indication that, as the rates have gone up, there is every year there's a few more who either, they just can't quite manage it and they might choose not to pay our rates and take the penalty.
And we do get communication from people. I'm just going to take the penalty because I need to pay this bill instead, and that's fine, and I'll just pay it later. Yeah, there are people that choose to do that.
So Ellen, on that trend, last year we've actually, the number of penalty notice issued has actually dropped.
Yes.
So again, that's probably what Nick's saying about the volume of money that we're charging. So that's probably an encouraging trend as well.
Yeah, that's right.
I think you asked at a previous meeting, and that's why we put that table in.
Very good.
In paragraph.
The
9. I'm just going. It actually hasn't got that section. The breakdown underneath that other one, it's got breakdown of penalties. It should have a paragraph number there, but it doesn't. But I think you'd asked, is there a breakdown of sort of where those penalties come from? So we did it by district, and it was interesting. It's not really showing any particular outliers that it's all. For example, is it all Queenstown?
Yeah.
But no, there's no particular sort of trend there. It's just it's pretty consistent with the spread of where the rates go.
And I must say, the new payment options will be interesting to view whether that, as time goes on, there's a greater uptake of those, and that makes it easier for some people to not to get into penalties.
We've got Councillor Scott waiting, but we're going to Councillor Laws first, who's been up there for a while. Michael?
Oh, thank you. A couple of questions. One point, the table that you've got on page 8, which for November 2023 total penalty amount of almost $1.2 million, is that the amount that's outstanding, or is that the amount of penalty, please?
That's the amount of penalty that we've charged.
So what is the total amount of rates that's outstanding? In other words, you've talked about people who are not paying. You've said that there are 5 or 6 of them. What is the total amount of rates that they owe the Otago Regional Council, what I'd call recalcitrants?
So I would need to come back to you on the top 5 penalty ratepayer balances. I don't know off the top of my head.
He's not asking top 5. You're saying because there's two parts to it. One is obviously we struck the total rates that were due on 31 October, and 20% of that wasn't paid, but that includes some, some that are on direct debit or, so that portion is outstanding. But then there's also the historic previous years that will have outstanding as well. So we'd have to go away and just do a summary of that, but we can do that, and we can circulate that, and then in this report going forward, we should report on that as well, because that will be that will be interesting, because there is unpaid that's current and is not charged penalties because it's got direct debits, and then there is historic, and then even if that current, there'll be some that got charged penalties because it's overdue, and then there'll be historic years. So we could break that down and run a report on that. Yep.
Nick, thank you, because that will tell us how much money we are owed from folk who say they're not going to pay us. Yeah, I mean, most of these penalty rates are late rate payers rather than penalties. That's where those notices will go out. They will eventually pay.
Yep.
It seems that that's a large amount of money for penalties. So I'm assuming the outstanding rates must be much greater than that. Yeah.
Yep.
Okay. Second question. It's to do with affordability or ability to pay, Section 10. It's a particular interest of mine. There are people who always find it difficult to pay. I note that and good on you. So the comms team have picked this up. I've been arguing about it for a long time. It's delighted that they're now sending out a rates explainer. So utilising that ability to not just explain your rates, but to communicate. And the one real opportunity we get to communicate with everybody in our electorate with their rates demand. Here's the next question. The rates rebate, in other words, that will assist the poorest and most vulnerable in our community of Otago. There's a rates rebate for them. I don't notice anything in the rates explained that actually identifies that people can claim a rates rebate over the combined rates of both the Otago Regional Council and whatever their district or city council is. Why aren't we doing that?
So in answer to your question, the rates rebate is paid by central government and is managed by the local territorial authorities, so our 5 TLAs. If you've received a rates rebate in the past, those TLAs automatically send you out a form. So those people that have received it in the past will be receiving that form. We have notification on the back of our notice explaining to people about a rates rebate and telling them what the maximum amount is and that they need to go to their local territorial authority to apply for it. They are the ones that administer it for central government. We also do have a section on our website which tells people about the rates rebate and tells them and shows them the central government, it's means tested, so shows them that table so they can assess their income. It refers them to I'm pretty sure it's NBIE's website where it is. And we also have our customer services team where if people do call asking for the rebate, it's awkward in the fact that we don't want to make assumptions that people would have that level of income if they live in that house. So we're not going to, we promote it as much as we can without being making assumptions on the ratepayer's income, and obviously that's quite derogative to a person. Some people can take offence to that. So it is a balancing act of trying to make sure that that information's out there by putting it on our rates notice in our website, making sure that our TLAs send it out to people that have received it before. If people mention to us that they're on a pension or super gold, we would obviously offer that information, but we also don't want to make those assumptions about people when they're asking us.
Well, but you don't. With all due respect, you don't need to make the assumption. You just provide them with the information. That's up to them whether or not they want to take it up. Yeah. And yes, I mean, so you're saying to me, well, we actually don't put it in the rates explainer. We put it somewhere else on that rates demand. Is that what I've just heard you say?
Yes, it's on the back, down the bottom, and the right-hand side.
That's cool. Okay, thank you for that. And finally, this one, the outstanding rates. When was the last time that you actually took legal action against ratepayers owing outstanding rates on the basis that they're not going to pay them? So have you ever taken action in the last 12 months to do so?
In the last 12 months, no, we have taken action before. It is more economical for us to take action with our local territorial authorities and do it together. And that's in most cases, if people aren't paying our rates, they're also not paying their local council rates as well. So obviously, in relation to legal costs that it costs us to do that, it's more economical to do it as a joint with the TLAs. Mortgage collection is our first response because that has a much lower cost. So the cost to us with doing mortgage collection, we notify the banks after a reminder period with the ratepayer, and the banks then go out and tell the ratepayer to pay, or it will get added to their mortgage. If a person has a mortgage, that's a significantly lower cost to us than going through legal action. And saying that, there is a pool of legal action people that I've been speaking with our in-house counsel about, that we will be assessing whether we should be going down that route and talking with our local councils in Otago.
How many folk are we, or properties are we talking about roughly, and how much outstanding rates are we talking about?
I'm sorry, we're still doing the assessment on arrears on whether they hold a mortgage or not. So I don't have those percentages. We are still going through seeing if they hold a mortgage, but I can come back in the new year in kind of January, February is when we're doing those mortgage collections. I could make a paper into this committee with those stats if that was required, if that was requested.
Thank you.
Thank you, Councillor Scott, then Councillor Forbes.
Yeah, cool. Councillor Laws actually asked my question on rebates, but I would ask for consideration of putting that data in future reports. Now, I know what you said was that you go to the TA and the TA does it on their behalf, but nevertheless, I think it's appropriate to actually have an awareness of how often that actually happens in relation to the ORC. And so that people actually understand that there is that mechanism. To be able to say in this report that your understanding is that there were 10 ratepayers that successfully achieved rates rebate for the ORC via the DCC or via the NETA.
So we don't have that information. So obviously the rebates are administered by the TLA. So we don't.
You may be able to get that information.
Okay.
The reason why, Councillor Robinson, is because there are people in the community that are under financial duress, and often they won't actually know of this particular mechanism. So I have them ringing up me from time to time, and and I might say, well, there's actually a rates rebates process, but I really don't have a good feel of how often it actually occurs, or whether I'm just pushing them off in reality. But if I was able to read here that there were actually 10 successful applications for the ORC, then that would sort of give some credence, particularly when we push through policy that actually do impact on a small number of people really in a difficult situation. So we've identified this, but it's shrouded in mystery.
True impact of the rates is what you're looking for.
I'm asking for consideration of some transparency around those that successfully achieve a rates rebate for the ORC. Obviously, it's via the DTA, and it's whether that information can be released. And I don't know if it can be released.
Well, we will look at what information is easily accessible that can be shared.
Thank you very much.
Alexa.
I really like this rates explained. I just think that there's one little thing that might be missing, and that is if anybody looks at adding up the budgets, it doesn't add up. And the reason for that is that it's obviously we have funding from other sources other than rates, which you have said on the front page. But I almost feel it needs another note on that second page, the public transport targeted rates 10.4, general rate 767, and where is the balance to 30 million? That's I kind of feel like people will look at that and go, oh, you can't even do your own addition without taking the time to go back and look at, well, obviously this is only what we pay towards it.
Yep.
I don't know how to fix it, but
yeah,
I know the clever people over there.
No, it's always
I've also asked that,
Zero rates only.
I've also asked that question as well. But
Yep.
Nice design.
Are we ready?
I also asked that question earlier on because the numbers don't add up from the front page, back page to the front page. But I'm pretty sure it's the internal, the internal cost is not included in the expenses.
Yeah,
I think that's
just
correct, wasn't
The risk,
Which one?
it? Just across the board
the
here.
risk is if we try to explain the
Yeah,
way we fund on a brochure, it will turn into a brochure explaining.
That's right.
And it will
Yeah.
have nothing about what we do.
yeah,
So
that's right,
there's a
yeah.
balance to strike, but point taken, and we can always, it was the first go. so
Yeah,
we
and,
can-
and it's, I'm
and the
really,
team did a
really
great
happy with
job.
it.
We can always look to refine it, and obviously next year will reflect some long-term plan decisions, which means that there'll be more information to share post that. So we'll have a look at it, but it is one of those balancing acts where if we tried to explain our finances completely, we would lose any space to actually talk about what we do. So
Yeah.
I
that's-
wonder if there might be more information. I mean, we've got the website and things there, but, and also where people can actually go and look at further breakdowns. Yeah,
I think-
very good.
Excellent, we'll start to look at that. No
I think
problem.
that, I think it's really awesome that softens down opening the envelope.
It sure does.
Excellent. Let's, we have a recommendation on page, please, page 26. Someone, Councillor Wilson, thank you. Councillor Scott, second. Those in favour?
Right.
Thank you, team, for taking note of those wee tweaks that the councillors want, but a very good report, and we just continually keep to improve those. So very good, and thanks for looking after our ratepayers' money.
Carl,
Thank you.
we look at their votes now.
Yep. And listen, if you can just hold,
Michael, can you just stay on? Michael, I just want to speak to council